Hello everyone. I hope you're all doing good. I hope you are enjoying the community vibes. I hope you're learning something and taking value from it. And so I saw a lot of discussion today about EU's price action, which, to be honest, looks a little bit unclear at the moment. But there were still some good short opportunities, and I figured I'd come here and drop a quick breakdown of the trade I took today and just kind of walk you through the price action and my thought process behind the trade. And so what I'm gonna do is I'm gonna use the bar replay tool and just kind of go along as if the New York session was about to start. So let's get to it. Every trade idea needs to start on the higher time frame. You need to start building your narrative from the higher time frame and then go down to the lower time frames, and that's where you execute your trade idea. And for me, I always start at the 4-hour time frame. And so, what do we see on the 4-hour? Okay, we see that we had a daily breakthrough structure right here, and so our daily swing points are this low and this high. And what we can see is that after we took out this low, we had a massive V-shaped recovery, and we came all the way up to the extreme and we took out this level of supply. But at the same time, we failed to close above supply, right? We failed to close above this level of supply. And so what happens is that at the moment, higher time frame direction is not very clear. Because on one end, you could say, okay, we failed to close above the daily swing point, and so daily structure is still bearish, and so we should come down and take out this low. But at the same time, we had a massive V-shaped recovery, and we invalidated a bunch of levels of supply, and so that could be a good indication that demand is taking control of the market and that we potentially could see higher prices. Especially if we consider that we are very low in this weekly leg, and that there are still unmitigated zones at here. So at the moment, higher time frame direction is not very clear. We have a case to go short, and we also have a case to go bullish. But now, let's see. So now let's pay attention to the details. Okay, so let's start with the bullish case. What we can see is that we had a expansion, and now we are undergoing a correction. And so if price is to go bullish, we should see another expansion, right? We can also see that our last 4-hour break of structure was right here. And so we could expect that from this demand level, we could see higher prices. However, one thing that it's important to know is that we need to sweep liquidity to fuel an expansion, right? So in this case, we swept the liquidity below this low, and then we had a massive expansion to the upside. And so if we want another expansion, we need to see a sweep of liquidity. Or at least we should expect a sweep of liquidity on the 4-hour time frame. But what we can see is that on the 4-hour leg, there's no inducement. That's what this block represents. So there's no inducement on the leg, and right here we came down, and you can see that all these candles trade lower than the one before, and so this is just lower lows and lower highs, so there is no sweep of liquidity here. And so even though we had a 4-hour change of character right here, we could argue that this low was poorly formed, and that if price wants to go bullish, we should still see a sweep of liquidity. And so we can expect price to come a bit lower, maybe sweep the low and then continue higher, or sweep these lows and continue higher. We don't really know. What we know is that there was no sweep, and if we want another leg, we can expect a sweep to happen. And so even if price is to go bullish, we have a short case for this, because no sweep, we should still see lower prices first before going higher. But then, if we look at the bearish scenario, which is no closure above the daily high, and so that means that this low is weak, and so it's a potential weak low, it's a target. That means that we should also be looking for shorts, right? And what we can see is that we came up here, we swept these highs, and so we created a supply range right here. So this is our first supply range, and then we came up here, we came here and we created another supply range, right? And so now this is our last unmitigated supply range, and inside this supply range we have this unmitigated supply line right here. And so for me, from the higher time frame, even though directional bias is not clear, I'm not sure if he wants to go higher or if he wants to go lower, from the higher time frame I'm still expecting lower prices, because if he wants to go higher, I want to see a sweep of the low, or at least a sweep of these equal lows. Or if he wants to go lower, there's a case for it to go lower. We swept the high, no closure, this is a weak low, we have supply ranges, and so now we mitigate this range and now we come down. Okay, so from the higher time frame, from the 4 hour, I'm looking mostly for shorts. But now we are gonna drop down to the 15 minutes and see what's going on. So if I go down to the 15 minutes, what do we see? Okay, so first things first, I'm just gonna refine this level just to make it look cleaner, and we can see that we have a clean bearish engulfing candle right here, and so we are now reacting to this supply level. And what else can we see? Okay, we see that we had a 15-minute change of character right here, so we took out the low and then we took out the high. On the 15-minute we could say that this is a well-formed low, because we had a fake chalk here, and so what that does is that people are enticed to buy here, so it creates liquidity below the low, and we swept that liquidity and aggressively, right? So we have a sweep of structural liquidity. On the 15-minute there's also no inducement, but we created liquidity before the zone, and so the low on the 15-minute is well formed. But we can't forget that if we want a 4-hour leg, we want 4-hour liquidity to be swept. So on the 4-hour, this low is poorly formed. But on the 15 minutes, we have a nice change of character, and from there we've been bullish, right? We had a break of structure right here. So this is our first break of structure. We had a break of structure right here, and then we had a break of structure right here. And so this would be our 15-minute swing low. But then we came into the supply range, we tapped into the refined 15-minute supply, and what do we see? We see that we swept the high, right? So we didn't close above the high, we swept the high, and then we had a change of character to the downside, right? We took out this low. And not only did we have a change of character, we also took a swing structure point. So we broke structure right here. So the 15-minute is now, after we take out this low, is now unconfirmed bearish. And the reason why is unconfirmed bearish is because we took out this low, but we still haven't put in a lower low. And so we could argue that, we could tap into these demands, and then from here, we use this swing low as liquidity, and then we push higher and we make a higher high, and so that's why it's unconfirmed bearish. So now what do we see? We see that we tap into demand and then we fail to push higher, and so because we fail to push higher, this low becomes weak, and so my short scenario is now having more confluences, right? So from the 4-hour, I want to look for shorts. On the 15-minute, we had a change of character in the break of structure. We also have a weak low. We failed to push higher, and so everything is looking good for shorts. Okay, what else do we see? Okay, we see that we tap into demand, we try to push higher, we sweep these highs, and we mitigate our last point of supply right here, unmitigated supply. And then from there we have another 15-minute change of character, and so everything is telling us that he wants to go short. Price doesn't seem to have strength to push higher, and so at the moment, everything is telling me, okay, I want to look mostly for shorts. I'm going to drop down to the, I'm going to stay on the 15 minutes for now and kind of analyze this range. Okay, so now we are stuck in this range between this high and this low. And to be honest, you don't want to be trading in the middle of this range until price shows you intent. And the reason being is because these highs are failing to take out this low, but these lows are also failing to take out these highs. So you have weak highs and weak lows. And so if you are trading from a weak structural point, you will become liquidity, right? So price is just ranging. There's not much we can do here. But what we can do is we can look at the details. Okay, so we had a change of character, and the cause of the change of character, we could say, okay, it was this extreme. We came up, we tapped into the extreme, we created a triple top, but what you have to consider is that liquidity is there to support your structural idea, not the other way around. And so just because we have a triple top and we could say, okay, I want to see this triple top get swept, that doesn't need to happen. If structure is bearish and if we are starting to push lower, we shouldn't expect liquidity to be swept, because that would mean that we are invalidating structure, right? And so what we can see is that, okay, we have a triple top here, and then we have this unmitigated wick. This is right before New York Open, and we can see that we sweep this high, we tap into this unmitigated wick, and we come down. And now we have clear intent in the market. And why is that? Because you can see that from here we had, okay, demand pushed higher, price came down, respected demand, pushed higher, came down, respected demand, came higher, respected demand. We have a demand chain, so demand is holding here. What's our last point of unmitigated demand is this one. This is our last point of unmitigated demand. And so if price wants to keep pushing higher and sweep this triple top, it should be from this demand level. But instead, price comes down, reacts, fails to push higher, and then demand fails. So now you can see that, okay, now we have clear bearish intent in the market. Supply has clearly took control over demand. And right? And so now, okay, now I want to go on the lower time frames, and I want to see, and I want to look for entries. Okay, so from the 15 minutes, what can we see? We have this level of supply, right? So we have supply number 1 and we have supply number 2 right here. To me, this is the level that invalidates this demand, and where you have clear intent in the market. From here, you have 3 big bearish candles that are clearly showing you that price wants to go lower. So this is the most important level of supply from me. But we also have this one right here, and maybe you could argue that there's something in here. But the reason why I'm not going to look in here is that if price wants to go all the way up here again, then it becomes more likely that it will sweep these highs and it will sweep these highs. If intent is in the market, price shouldn't, or at least I don't expect it to come all the way up to the top again. We push the way aggressively. I want to see commitment. I want to see price react to one of these zones, preferably this one, because this is the one where we had bearish intent come in. This is the demand to supply flip. This is my preferred zone. Okay, so now I'm gonna go to the 1 minute, and this is New York Open, and what we can see is that we reacted to demand. I'm not sure if it's this one, but should be. Yeah, we reacted to demand, and you have to ask yourself, why is demand holding? This low failed to take out these highs, so this is not a strong level of demand. This is a weak low. We also have equal lows right here to target, and so you have to ask yourself, why is that level of demand holding? Well, in a supply controlling market, demand will hold to build liquidity. Because when demand holds here and you have this massive V-shaped recovery, there's a bunch of people funneling into buys right here. People are thinking, well, now this is going to clear the triple top. But you forget that we are bearish, right? We had a break of structure, we had a change of character, we are respecting supply, and so demand is holding to build liquidity. People are going to start buying here, thinking that we will sweep the highs, take out the highs, but in reality structure is bearish, and therefore this high is protected because we took out demand, we completed the break of structure here, and so that's why demand is holding. And so now I want to look for shorts here, and if we just play price, we can see I wasn't at the charts. I got to the charts a bit late, so I didn't take the first trade. This would be the best trade, but I didn't take it. But I'm still gonna show you how I would enter this trade. Okay, so we can see that we have equalize, we have a fake chalk right here, so we take out this low, we have a fake chalk, so people are starting to funnel into sell, so we create liquidity above these highs. So there's equal highs. I'm gonna drop down to the 30 seconds, I think it will be clearer. Okay, we have equal highs, we have more equal highs right here, and now we are at the very extreme of the flip zone, and so now I'm gonna look for a reason to go short. That's it. And if I come here, because we are at the very extreme, I'm cool with being aggressive because everything else is aligned. So 4 hour, 15 minute, everything is aligned, everything is telling me to go short, and so this is a strong level of supply. And so if I'm gonna get a 1 minute chalk right here, it's gonna start with a 5 second chalk right here, and so I want to be aggressive and I'm gonna look to enter right here. And so this is my level of demand that put in the high, right? So we have demand, price comes up, mitigates this demand, pushes up. Now this is my level of demand. Let's see what happens. Okay, demand fails. Where's my reaction? This is my reaction to demand. Supply. And so if price comes here, I'm okay executing with 1.5 pips, which is what I always do. So if we play price forward, okay, we get tapped in, price just goes. Okay, so this would be our first trade. To be honest, if you were waiting for a 1 minute change of character and a test, you wouldn't get an entry here, but that's okay. You don't need to be the first in the market. This is just to show you how I would be aggressive on the seconds. This is how me and most of the guys on the team are doing, but you don't have to do this. This is just an example, right? And so this is a weak low. We can target this weak low, and also we have available liquidity right here. It's Friday. I don't want to be swinging for defenses. I'd rather take out, because it's the higher time frame direction is unclear. Price could sweep this liquidity and then go higher. So I'm cool with just targeting this liquidity. And where will be my target? So we have equal lows. This low also didn't do anything. There's an unmitigated demand right here. And so I'm cool with targeting that liquidity level, right? Okay, so this is my demand level. Okay, cool. I missed this trade. I wasn't at the chart, and it's okay. When price starts going, you don't have to think, oh, I missed the move. No, price will give you more opportunities. You just have to follow price and see what he's doing. Okay, now we had a proper break of structure right here, and so now I'm not expecting price to come here anymore. It could, but you know, this is an important supply zone because it flipped this 15-minute demand. I have all the confirmations here, so I don't really need price. I'm not really expecting, if price is going to go lower and it's giving me all these confirmations, I'm not expecting price to come higher. Just because structure is structure, we had a break of structure here. If price wants to go higher, I mean, it should have done something like this, tap into this demand and go higher. It didn't. Demand is failing. We have clear bearish intent. And now I'm looking for an opportunity to get in. And what I'm going to do is I'll look to the left and I look for demand, and I look for the reaction to that demand, and then I want to see that demand getting validated, because that means that supply took control over demand, and I want to get in on the invalidation point, right? So we can see that there's no reaction to this demand, so it doesn't matter to us. And now where's the next level of demand? Okay, this is my next level of demand, and the reason why this is a valid level of demand is because we have this supply level, right, which I'm pretty sure if we look to the left, this probably reacted to some level of demand. Yeah, reacted to this extreme weak. It doesn't really matter. There was a reaction here. This was the demand that was injected into the market to invalidate this level of supply. And I think I'm going to do this, something like that. It doesn't matter. And so this is demand. And now what we can see is that we had a reaction and then demand failed, right? So this is our demand to supply flip, but I always like to see a sweep of liquidity, and there's no sweep in this reaction. And so I'm already expecting this to get swept, right? I'm expecting this to get swept, and I'm expecting price to maybe come up to the extreme. It doesn't need to, but it could. One thing to mention also is that we have a supply range, right? We took out these highs and then we broke lower, so this is our new supply range. Okay, so now I'll play price forward. Okay, so now we can see we had a clear sweep of the flip, and we mitigated the previous range and we created a new one. And so now I'm interested in taking a short, or at least looking for confirmation to short from here. And the reason why I would look for confirmation is because the extreme is not mitigated, and so price could still come to the extreme. Because I'm not sure, you could place a limit here and then a limit at the extreme. I don't like to do that. I like to look for confirmations. And so now I'm going to place price forward. Okay, the level doesn't get mitigated, so this to me becomes inducement. So, and now let's see what happens. The reason why, so if we take out this high, we have a bullish chalk, right? We take out the low and we take out the high, but the thing is we are in a bearish market, and so we know that demand is gonna hold to build liquidity, and we know that we get these fake chalks because, you know, when we get a chalk, people think, oh, we are going to go bullish again, and they start buying, and so they create more liquidity. And so I'm not concerned with this structural point to fail. I could still look for confirmation to go short here, but this is my level. This is the level I want to sell from, and you have to trust your levels. The reason why I don't want to look for shorts here, it's because this could very easily be used as inducement. This is a much cleaner supply level that swept liquidity. There's no sweep of liquidity right here, and so I want to short from here. And so now I'm going to go to the 15 seconds, and I'm just going to wait and see what price does. Okay, so price comes up. You can see that we have no confirmation to go short here, so even if you wanted to look for shorts there, you wouldn't, because I mean there's no confirmation there. And now here, what do we have inside here? We have, I'm gonna refine, we have the first zone and we have the extreme. I want to see price tap one of these. If it's the extreme, for me it's better, because when it's at the extreme I can be more aggressive, and the reason why I can be more aggressive is because there's no other level above it. Right here I want to see proper confirmations, because if I'm very aggressive here, price could very easily, you know, induce me and take me out. At the extreme I can be more aggressive, because if price is going to respect this level, it's not going to go much higher. It could come to the extreme, yeah, and if it comes to the extreme, then I was wrong trading from this level and I would look for confirmation here. But for now I'm interested in this level, and so I'm going to look for confirmation here. Okay, so we play price forward. Okay, price blows through this zone, there's no confirmation. I'm still waiting. Okay, we tap into that level. What can we see? We can see that this is the demand that put in the high. We can see we have demand, mitigation, demand, mitigation, demand, mitigation, demand. All these ranges are mitigated. This is all available liquidity for me to target. This is all available liquidity. And so now we have a nice rejection from the extreme. So this is confluence number one, V-shaped recovery. Price goes in and goes out very aggressively. And now what happens? I want to see more. Okay, we try to push up, we failed. We tap into demand. What happens? We tap into demand, try to push up, try to push up. Okay, we can push up, right? Now, I said I'm aggressive because I'm at the extreme. And so I look at this as a failed reaction, a failure to push higher. And so I'm happy to execute, anticipating that this will be a flip. I'm happy to execute when price comes back to this level. I use a 1.5 pip stop, so that's it. I'm happy to execute right here. So price comes in, taps me in. Okay, let's say you didn't execute right there because you are waiting for a change of character. Okay, so now I have my change of character, right? So chop down, and what you can see is that we have a supply range right here. We have another supply range which mitigates the previous range, and then we have another supply range. And so I would be happy to execute inside of this supply range right here. So if price comes into this range, I'm just executing it, and that's it. I'm in the trade. Okay, I'm going to take this out because this was the one that I took. I was aggressive with it because I'm at the very extreme and everything else is telling me that it's going to go short. And yeah, I'm going to target liquidity and be done for the day. So if I go down to the 1 minute, yeah, then price just sold off, and that's it. That was my trade. I believe price went lower, but I just left the charts right here. And yeah, guys, that's pretty much my breakdown. I hope this was helpful. I hope you could see how a trade idea starts from the higher time frame, and then you go down the time frames, and basically you have a lower time frame execution with a higher time frame narrative. And yeah, let me know if you like this video, if you learned something from them, and if you do, I'm happy to make more of them in the coming weeks. Yeah, see you guys.